Hey there, friends. Over the last several months, videos claiming that seniors do not have to pay certain bills have been flooding the internet. And before we go any further, I want to be completely straight with you about something important. A large portion of that information floating around out there is either blown way out of proportion, dangerously oversimplified, or just plain incorrect. Some of those videos make the whole process sound far easier than it actually is in real life. Others list programs that the overwhelming majority of seniors do not genuinely qualify for once you read the fine print. And then there are videos that are technically accurate on the surface, but conveniently leave out the one critical detail that actually determines whether you walk away with the money or walk away empty-handed. So today, I personally went through all of that content, all of those claims, all of those programs, and I pulled out only the information that actually holds up. What I am sharing with you today are 7 specific bills where the exemption is legitimate, where the funding is actually in place, and where there is a concrete, specific action you can take starting right now, not someday, not next month, but this week. I am going to break down each one clearly and carefully, point out the exact detail that most other videos completely overlook, and hand you the precise step you need to take. So before we go any further, grab a pen and a piece of paper. Go through this list with me as we talk. Put a check mark next to the ones you already knew about, and draw a circle around the ones you need to look into before the week is over. Let us get into it. But before we dive in, I need to take just a moment to tell you about something I have been working on. Over the past several months, I have done nothing but sit down and read through Social Security regulations, Medicare guidelines, IRS tax forms, and benefit program documentation. I checked every single number by hand, one at a time, because I was frustrated. I wanted one place, just one reliable resource that had all of this information correct, complete, and actually useful. What I ended up building is a comprehensive guide designed specifically for anyone who is currently receiving Social Security or planning to apply for it, anyone enrolled in Medicare, and anyone trying to make sense of how taxes and benefits interact during retirement. Everything in this guide is written in straightforward, plain English. Every figure has been cross-referenced against the government's own 2026 published data. And every single item in the guide comes with the exact form number, the exact phone number, or the exact website you need to take action. The guide is called the American Retirees Money Playbook, and I genuinely believe it is worth your time. For most people who sit down with it, 10 minutes of reading is more valuable than several hours of searching online and waiting on hold with government agencies. It has the real potential to save you money you are currently leaving behind and time you simply cannot get back. To find it, just click the link in the description below this video or in the pinned comment at the top of the comment section. That is honestly the simplest way to get to it. And if you happen to be watching this on your television right now, you can scan the QR code that is displayed on your screen. Alright, now let us get into what you actually came here for today. Bill number 3. The elevated Medicare premium that is being calculated based on income you earned 2 full years ago, rather than the income you are actually living on today. If your current Medicare Part B bill is higher than the standard $22.90, you are paying what is called an ARMA surcharge. ARMA stands for Income-Related Monthly Adjustment Amount. Medicare calculates your 2026 premium by looking at your 2024 tax return, and this creates a very specific and very common problem. If your income was unusually high in 2024 because of a one-time event, maybe you sold your home, maybe you took a large withdrawal from your IRA to cover a major expense, maybe your spouse passed away and your filing status changed as a result, You are currently paying a surcharge based on money you earned during a single exceptional year. Money that is not representative of your financial situation today and that you no longer have access to. Let me walk you through a real-life example to show you exactly how this plays out. A retired couple sold a home in 2024 where they had lived for 30 years. The capital gain from that sale pushed their income above the IRMA threshold for that tax year. Now in 2026, both of them are paying Medicare surcharges that add up to more than $1,400 per year between the two of them. And that surcharge is based entirely on a single home sale that happened 2 years ago. Their current income consists of their Social Security payments and a modest pension. They are well below the IRMA threshold today. There is a solution, and it requires exactly one form and one phone call. The form is called SSA-44. It's 1 page long, and it's completely free. When you submit it, Social Security recalculates your premium using your current income figures rather than your 2024 tax return. To initiate this process, call 1-800-772-1213. When someone answers, say the following words exactly. My income dropped significantly since 2024 due to a life-changing event, and I want to file Form SSA-44. Write that exact phrase on your notepad right now so you have it ready when you call. Bill number 4. Your annual property tax bill and the specific application that can prevent it from increasing year after year. Every single state in the country offers some form of property tax relief, specifically for senior homeowners. But here is the problem. The vast majority of seniors who are eligible for these programs have never applied for them. According to research from AARP, only about 8% of eligible seniors have ever claimed these benefits. That means 92%, which represents more than 8 million people across the country, are currently paying full property taxes that they are legally entitled to have reduced or frozen. Let me give you some current examples from specific states so you can see what kind of money we are actually talking about. In Texas, the senior homestead exemption was expanded in 2025 to $60,000, an increase from the previous amount. Seniors who have not yet updated their exemption at their county appraisal district may be missing out on that expanded relief without even realizing it. In New York, the Senior Citizens Homeowners Exemption now allows local governments to reduce the assessed value of a qualifying senior's home by up to 65%. Up, put, under, and O, and power. In New Jersey, the Stay NJ program is now providing up to $6,500 in annual property tax savings for eligible seniors. And here is the timing detail that makes this particularly urgent. In most counties across the country, the application deadline for these programs falls somewhere between August and October. That means right now, whatever time of year you are watching this, is likely the window during which you need to act if you want to see the benefit reflected on next year's tax bill. Here is exactly what you need to do. Look at your property tax bill. The phone number for your county assessor's office is printed on that document. Call that number this week. When you reach someone, ask 2 specific questions. First, what senior property tax relief programs are available in this county? Second, what is the application deadline? Write that deadline on your paper the moment they give it to you and do not let it pass. Bill number 6. This particular one surprises most people because it involves a benefit they did not even realize they were already supposed to be receiving. If you are currently enrolled in a Medicare Advantage plan, meaning you have chosen a private insurance plan to receive your Medicare benefits rather than staying with original Medicare, there is a very strong probability that your plan already includes something called a quarterly over-the-counter benefit. This is real money that gets loaded onto a prepaid card each quarter, and you can spend it on everyday health and wellness items without needing a prescription from your doctor. We are talking about vitamins and supplements, pain relievers, dental care products, first aid supplies, blood pressure monitors, heating pads, and a wide range of other health-related items you likely buy anyway. The dollar amounts vary from plan to plan, but they typically range from about $50 per month on the lower end to more than $175 per month on plans with more generous benefits. Here is the urgency around this, right now. For many seniors enrolled in Medicare Advantage, the Q3 allowance, meaning the benefit allocation covering July, August, and September, resets on July 1st. Any money remaining unused in that quarterly balance expires permanently on September 30th. It does not carry over, it does not accumulate, it simply disappears. And the number that puts this in perspective is striking. According to data from eHealth, the average senior loses more than $500 per year in unused over-the-counter benefits simply because they did not know to check their balance or spend it before each quarterly deadline passed. That is $500 in benefits that those seniors already paid for through their plan premiums, benefits that vanished because no one told them to use them. Here is what you need to do right now. Pick up your Medicare card and look at the Member Services phone number printed on the back. Call that number today. When someone answers, ask this exact question. Do I have an over-the-counter benefit, and what is my current Q3 balance? If you have money sitting there, use it before September 30th. And remember, you do not need to be experiencing any illness or medical issue to spend it. Stock up on things you already use on a regular basis. Bill number 7. The monthly Medicare premium reduction that is hiding inside certain insurance plan auctions and that most seniors have never thought to investigate or even known to look for. A subset of Medicare Advantage plans. Approximately 25% of available plans in 2026 includes a feature called the Part B Premium Give Back benefit. Here is how it works in plain English. When you enroll in one of these specific plans, the insurance company covering your Medicare benefits agrees to absorb a portion of your standard $22.90 monthly Part B premium. Medicare then responds by reducing the automatic deduction that comes out of your Social Security check by exactly that amount each month. If the give back on a particular plan is $80 per month, your Social Security direct deposit becomes $80 larger every single month. Your actual Social Security benefit itself has not changed by a single dollar. But the amount hitting your bank account is now meaningfully higher because you are no longer having that full premium deducted. In certain areas of California, Florida, and throughout the southeast region of the country, there are plans available that offer give-back amounts of $100 or more per month. That adds up to $1,200 or more per year going directly back into your pocket just by being enrolled in the right plan. And here is the important thing to understand about why most people do not know this benefit exists. The plans that include it almost never mention it in their television commercials or their mailers. You will not find out about it through advertising. The way you find it is by using Medicare's official plan comparison tool. Go to Medicare.gov and use the Plan Finder feature. Enter your zip code, browse the available plans in your area, and specifically look for the phrase Part B Premium Reduction in the plan details. The annual open enrollment window for switching Medicare Advantage plans opens on October 15th. That means right now, August and September, is the ideal time to do your research, compare what is available in your specific zip code, identify a plan with a give-back benefit, and be fully prepared to make the switch the moment the enrollment window opens. The new plan and the higher monthly deposit take effect January 1st. Look at your paper. Count the circles. Each one of those circles represents real money that belongs to you and that you are currently not receiving. Start with whichever one represents the largest potential savings for your specific situation, and commit to making that call or filing that form before this week is over. Do not wait until next month. Do not set the paper aside. The deadlines on several of these are real and they are coming soon. If this video helped you understand something you did not know before, please hit the subscribe button so you do not miss what we cover next. And if you know someone who is 65 or older, a parent, a neighbor, a friend, anyone, share this video with them today. One share takes 10 seconds and could genuinely save someone hundreds or even thousands of dollars they did not know they were leaving behind. Thank you so much for being here, and I will see you in the very next video.